Hello, good afternoon. It's Adil Fazal here, market analyst at CFDs.com. Be sure to visit www.cfds.com for your trading needs and certainly apply for that generous cash bonus potential offer that's available. Alternatively, you can visit the educational site www.cfds.education to certainly learn more. Okay, let's try and decipher this the position of US markets prior to the 14:30 open. Obviously, we know it's Yellen Day. So the text is out at 1:30 p.m. UK time, and then you have the hearing at 1500 3 p.m. UK time, and we have Mr. Fed Williams certainly talking later on as well. Okay, let's see exactly where the market is positioned. We have Nikkei down quite substantially overnight. Will certainly be a negative factor with the Nikkei down 370 points. It was down much more at one point, although the futures certainly have rallied back up to the 16,000 level. And the USD JPY is still hovering around the 115 level. So all eyes on the USD JPY. Now 115 certainly, according to Kathy Leon, is certainly an intervention zone. Okay, so you can see here we've been oscillating within that zone. Each time it goes below, you can see that the 114.13, 114.3 level, there certainly is some buying or buying power certainly triggers, whether it's a BOJ, etc. I mean, you can look at it from whichever way you want to. It certainly is helping the actual USD JPY higher and therefore preventing the yen from going lower as well. If I bring up the chart of the yen itself, the chart of the yen, bring up a daily chart of the yen, you can see we've actually surpassed 75%, which is not exactly a good sign. Now, although we do have a topping tail on the yen here on the daily chart, given the price action overnight, it certainly is worrying. Okay, that's certainly from my understanding. Now, if I bring up the chart of the yen, also as I say the Nikkei, bear with me, here we go, Nikkei daily, and you can see that certainly isn't a healthy sign, although we did go into gap fill support, so that certainly is a promising sign if you are a bull, but then you do have another gap below, so it certainly is. It's a tricky way in order to read this market, a very tricky way to read it either way, but the weekly chart certainly is screaming for that gap fill below at 200 MA to close, and it certainly seems that Mr. Kuroda or Mr. Abenomics basically has gone wrong. Okay, so it certainly is very bearish. Even with the absence of China, this market can't stay afloat. Now, the European markets have rallied on the back of a news flow with regards to a potential ECB monetizing the banks and potentially buying bank stocks as part of their QE methodology. It certainly is interesting, okay, to say the least. That philosophy and that train of thought, we'll see whether it gains traction in the US markets, okay? And that certainly is a backdrop. Now, European indices are up quite healthy. The DAX up 2.5%, the FTSE up a percentage point, the CAC up 2.2%. So certainly healthy moves in the European markets. Whether or not that carries on into the US certainly is a different question altogether. Now, we have the economic data in terms of the US. We've had mortgage data, mortgage applications certainly coming out better than expected, and then all eyes on the Yellen speech or text itself, and then we'll see exactly how the markets decipher it. Now, in terms of the S&P 500, let's start off with the S&P. Where art thou, S&P, 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 here we go, S&P 500. Okay, so the S&P 500, if I go to a weekly chart first of all, currently trading at present, as we stand, the S&P is currently mingling around, well, it's 1971, it's, or should I say 1871 at present. On the weekly chart, you certainly see that bottoming tail certainly is potentially holding. Daily chart, again, you had a doji yesterday, but it's a worrying sign given the fact that we did test those lows again. It certainly isn't a bullish signal at all. 60-minute chart, 1871 puts you into or approaches, you are approaching gap fill support. Now, you have 1880 as gap fill. Okay, you have 1870 as that pivot high. And then obviously you've got previous support equals resistance at 1872. So 1872 is a key level. If we break above 1872, then you are looking at 1880, which is gap fill. And both of those are key resistance zones. Given the fact that the S&P is going to gap up by almost 20 handles, that certainly is a indication that the bullish news has been factored in. Now, the other geopolitical, or should we say just political concern that the US indices will have to contend with is whether or not these two individuals, well, one is a bigot and a racist, known as Donald Trump, whether or not him coming or potentially winning New Hampshire is going to be bullish or bearish. So again, The way in which the market is interpreting, or the way in which the journalists and the analysts are interpreting it, is actually a net negative, given the fact that they are anti-Wall Street, anti-establishment, etc., etc., and it creates uncertainty of the unknown and so on and so forth. So if those Mr. Sanders and Donald bigot Trump, okay, is coming into power, then obviously that's going to cause financial shockwaves from a US markets perspective, and therefore it's a risk-off scenario. So bear that in mind, okay? Now, Mr. Alidi did mention this yesterday overnight, that the USD JPY dipped below 115 due to the fact that Mr. Sanders and Bernie Sanders and obviously Mr. Trump came back into power. So again, or potentially won the New Hampshire, and so BOJ yen suppressing efforts also eroded as New Hampshire primaries deliver worse results for markets. So don't forget that, okay? BOJ yen suppressing efforts wiped out as euro yen soars on crashing oil, impaired energy debt, plummeting yields, corroding European banks. Okay, so whether or not this news flow with regards to the ECB intervening is going to save the day, circumspect. Okay, circumspect. Okay, so again, bear that in mind. So S&P, those two levels, 1872, 1880 gap fill. Okay, 60-minute chart itself, you still have that pivot low support at 1812. Whether or not we test that is another question. Again, 1876 in the 60-minute chart, 1876 to 1872 is key resistance for the S&P 500. Now, if we do manage to break below that, or break above that, sorry, then you have the 1890 resistance zone in the S&P. Okay, right. We cross-reference that as always with the Russell 2000. So let's bring up the Russell. The Russell at the moment is currently trading at 972. We made a pivot low around 957. So we are now into that resistance zone at 97. Now if we break higher, then you have 98. So 980 will be gap fill. So again, that certainly is something to consider with regards to the Russell itself. And those two zones will be key resistance zones, especially given the fact that the Nikkei was down 3% overnight. Now, the next stock to watch is a Nasdaq, given the fact that we had Solar City concerns. Now, given the fact that the stock has plummeted almost 25%, the Nasdaq on the 60-minute chart, you have gap fill, so watch out for that gap fill at 4024. Can it close that gap? I don't think so, given the fact that the Nikkei is down 3%. And the USD JPY story is below 115, and you have the euro now potentially into support, and you have the situation with US elections creating uncertainty and fear for US markets. So again, this is a key zone, a key resistance zone. As at that, you are looking at pivot high to pivot low. Any move higher here, 38% fib, that 4008 level will be solid resistance for the Nasdaq, and you will be looking for potentially lower prices. That's my interpretation thus far. Okay. Right, okay, so in terms of the biotechs, yes, they have potentially based. So this is something that I'm going to discuss with regards to your weekly chart. You can see that we are holding that 200 MA. So I would be, initially I'm looking for a dip on the Nasdaq, and that dip will be bought. But initially you are looking for a potential pullback, given the fact that you've gapped higher quite substantially. In terms of cross-verifying that with the semicons as well, you are looking at potentially making a base. The daily chart, obviously, you fill the gap on the semiconductors, and you are looking for a potential bounce on the Nasdaq as well. Again, like I said, short-term pullback and then long-term rally. Okay. In terms of emerging markets, we can certainly bring that up as well. You are looking to potentially hold that support on the emerging markets. Financials will be very important today, given the Deutsche Bank story, and now it's whether or not we can push higher. Now, if we do push out on the financials, and you are looking at potential gap fill, some resistance and gap fill. So two gaps to fill on the upside, and we'll see exactly how the financials trade in US markets. Now, let's just cross-reference that also with the Dow. Let's bring up the Dow itself. Dow Transportation certainly was very bullish yesterday, certainly pushed higher. It's certainly broken out this bearish channel, so again, certainly some respect needs to be shown here. Cross-verify that with the Dow Jones. Let's just bring up the Dow Jones for you. Certainly a bullish pattern here. We're currently trading on the Dow at press 6120. So you're at that pivot high at 6130, 200 MA. Now, if we do go higher, 6204 is gap fill resistance on the Dow. So certainly take that into consideration when trading that today. So daily chart as well. still languishing at the lows. Whether or not we can bounce from these lows convincingly is going to be the telltale sign. Okay, I think that's a market wrap for US indices. Again, all eyes on the S&P 500. Now, you do have oil flushing quite substantially overnight as well. Yesterday, we are at a potential double bottom scenario now for oil. So bear that in mind as well when you're trading. If we can hold that double bottom support, obviously it's bullish. If we can't, then it's certainly looking very, very bearish. Okay, so those two factors as well in terms of understanding the markets. And it's all about Yellen, whether or not she can save the day. So all eyes on Yellen, and let's see what she has up her sleeve. Goodbye now.